Charting Dan McDermitt from thechartguys.com joins me again. Dan, how's it going?
Great, glad to be back.
You bet. Dan, we have a lot to talk about today. Let's start with how yesterday the whole cannabis sector took a big bounce to the upside on, I don't know what. Do you have any idea what caused that?
In my opinion, it's the S&P 500. It went through a short squeeze bigger than I've ever seen as far as short-term timeframes. The 5-minute timeframe exploded based on Trump-China trade deal progress and just a huge response that surprised the market. And the cannabis space slowly was a laggard move, maybe 15, 30, 45 minutes behind that, and then just kept an uptrend all day. And it was really the market saying, oh, we don't have to worry about testing the recent lows from the dump. And
Right.
that transpired into some confidence in the marijuana sector.
Mm-hmm. So you managed to make money in your trading style yesterday. Tell us how you did that, and like what is it that, if you envision yourself as a trader, which I certainly don't, how would you position yourself mentally as well as in financially?
So one of my trading edges is oversold bounces, and that's one of the more difficult styles. And for newer traders, it's a way to lose money. But being 9 years into the game, it's very clear to me that this style works well for me, and I trade it really well. And even just before we came on here today, I flipped the S&P 500, which is down 2.5% today, but I got a half-day maker of a trade just by a quick little oversold bounce. So yesterday, it was Curaleaf, and it was knowing that we were overextended with multiple days of downside action. I used the RSI, which is an indicator that shows relative strength. It's the relative strength index, and it shows when things are overextended. And yesterday for Curaleaf, we had a gap down open. And a general rule of thumb is with gap down opens, keep an eye out for a buying scenario. Obviously, it depends on the details, but as a general rule of thumb, that's something that I look for. So was able to get into the US ticker CURLF at 650, and then very comfortable through the rest of the day, just locking in a little bit of profit and managing the position from there.
Sure. Okay, well, that's not something that the average bear can do unless they're plugged into the machine of the market on a full-time basis. I want to talk to you about the earnings that were reported, or rather, earnings becomes a bit of a inaccurate term in terms of most companies. Tilray reported earnings of, or rather revenue of $45.9 million, but a loss of $35.1 million, or 36 cents a share. Acreage Holdings reported a $17.7 million quarter, upon which they lost $17.1 million, or 36 cents a share. And most notably, in Acreage's case, they only had $600,000 in cash left at the last quarter. Yeah, that's scary. Flower One, this is interesting to me. Q2 revenue was $636,000, but net income was $19.1 million, or 10 cents a share, based on biological assets of $37.2 million. So so all these companies have this, negative bias, except, Charlotte's Web reported positive earnings of 2 cents a share on quarterly revenue of $25 million, which puts them on solid exit run rate of $100 million. So this earnings picture is, to me, very emblematic of the entire cannabis industry. 1 out of 10 companies reports actual earnings. That's real profit, not based on biological assets. So what is the long-term prognosis of the sector as a whole for you based on this earnings scenario, Dan?
It's really just a transition from forward-looking euphoria and everybody getting in, thinking it's the next big thing and looking 5 years out, and then just reality. And this is the reality setting in. And yeah, it's going to take a whole lot of time. A bunch of these companies are not going to make it and are not going to be on the forefront. And I'm looking for the same thing to happen in the USMJ space. When we get some kind of federal catalyst, we're going to enter euphoria mode, and market cap and forward earnings aren't going to matter. And then that will pop to a certain degree. The euphoria will run out. The earnings will start coming out, and then we'll drop back to reality. And that's usually the way it goes in euphoria markets. And it seems like that's where we stand on the marijuana sector.
Yeah, you bet. Dan, just as an aside before we jump to the charts here, how does somebody sign up for your programs? Because tracking your comments relative to actual performance, I've noticed that I could make money if I did what you did. So tell me, how do I become a sort of student of what you do?
Sure. Well, we got plenty of free content on our YouTube chart or YouTube website, the Chart Guys, and that's just, to introduce yourself to it, see if it's something you're interested in. I don't like being a salesman. I've never done, a really good job of doing that. So we have the website, chartguys.com, and if you're interested in checking it out, we got the chat room community, and I do daily live streams a couple times a day, and it's really great. The biggest part of our community is the members and the amount of knowledge that is just put into this space. I learned so much from them as well, and I've never encountered a group of people like this. So I'd say that's the biggest benefit, not just me and the live analysis and all that stuff, but learning from a group where everybody has the same goal is something special.
Wow, you bet. I'm going to sign up. Not that I have too much time for learning beyond what I learned from everybody like you today, but it's really interesting. All right, Dan, let's go look at some charts now, and you can tell me what's what in the marketplace.
Sounds good.
So to start it off, we'll just exemplify what's going on in the S&P 500 because it was a red open yesterday with a rocket ship to plus 2%, and then today falling off a cliff and giving it all back and then some. So that's really just spiking the fear in the market overall, as really it was a sigh of relief for the bulls yesterday, and that has been wiped out. And there's no real reason, and this is what I find in markets as a whole, where the herd is looking for reasons that things are happening. Why are we going up? Why are we going down? Technical analysts, they just know that's the way markets work. They go up and down. There doesn't always have to be a reason. Sometimes the reasons are fundamental. Sometimes they're technical. But in this instance, fear can be magnified if there isn't a reason. So we went up yesterday, the reason being there was some progress made in the US-China deals, some tariffs were delayed, and they were talking about, talks over the phone in a couple weeks, things like that. And giving that all back without any significant change in the narrative from yesterday spikes that fear, as it's an unknown. What's going on? Why is this happening? So complete 180 turnaround. Here it is on the daily time frame. Big green day, breaking to the top of the bounce and giving it all back and heading to the low of the dump. And if we're looking at HMMJ, just using this as an example for a broader perspective on the sector, completely opposite days, a 180 turnaround. And it's, you have to say that there's absolutely correlation to what the S&P 500 is doing. A lot of people struggle with correlations because they are constantly changing. The only reason I keep a fairly firm grip on correlations is because I'm staring at the screen for hours on end a day. That's my job. That's what I do. So I'm always watching these little intricate links on the 5-minute time frame of correlations picking up, and then they fade, and they come and go all the time. In this instance, the S&P 500 had a significant impact on the euphoria yesterday, and now the fear, and here we go again in the sector today. So I want to touch a little bit on APHA, just as an example of what I was talking about, James, because the last time I talked to you, I was talking about the bullish earnings reaction, but the need for follow through and a daily trend change. The gap up was great. The little push after that was great, but we gave so much of that back, and now we're in that pattern again of lower highs and lower lows. So we came from multiple months where every single bounce was a lower high and every single pullback dropped to a lower low. And here we are doing it again, just from a different starting point. Earnings gave the gap up, but it's still just a lower high and lower low pattern at this point. The bulls never changed the daily trend. That doesn't keep any pressure on bears to continue covering. It allows bears to enter positions and stay comfortable, and it keeps all of the pressure on bulls as support levels and recent lows continue to get taken out. So the bulls had one requirement to shift that momentum, and they were unable to follow through with it. Every earnings, we had the first wave of earnings, we had Village Farms, APHA, and all of those names, the initial reaction was bullish, and we would gap up, and then we would see profit taking after that. And just pulling up VFF real quick, we can see, again, big gap up earning yesterday, all profit taking yesterday into today. Now, into today, we have the TLRY earnings, TGOD earnings, CWeb. TLRY was down 15% initially to start the morning, and even CWeb, who reported a profit, I believe, I haven't read those earnings, but I believe they reported a profit, they were down 15% as well. So huge pullbacks because of the negative reaction to earnings being magnified by the bearish action in the S&P 500, and now all eyes are on CGC, which of course is the sector leader. And CGC, if we have a bearish reaction, we're going to drop down to the lowest prices that we've seen since pre-Constellation deal. and that's going to drop us down to the price of January 2019, and we'll be watching some psychological levels, $30 psychological, but the bottom line is CGC has not changed the daily trend ever since we started pulling back from $52, which was the local top up at the end of April. So it's been a very notable downtrend in the sector with just the inability to change daily trends. Some of the USMJ names have changed the daily trend. A couple of the stronger Canadian MJ names like VFF were able to change the daily trend, but as a whole, we're really just not seeing any significant follow through that gives bulls comfort that the bottom has been set. We've seen some shifts in the last 2 weeks that can have us say, okay, we're getting a little bit closer. Bulls still have to do X, Y, and Z, and we're watching for it. As we know, seasonality favors the bulls in the fall and the winter, but we're still not there yet. If CGC can have a bullish reaction to earnings, that will obviously help. But honestly, my focus at this point is on the S&P 500 and watching the 281.72 low from the dump, because if that level breaks, there's a lack of support nearby, and then you're just going to get CNBC spinning the recession narrative, talking about inverted yield curves, all of that stuff. And, just yesterday, that was on the back burner, but as soon as you see weakness, that's back in the forefront, and that's where we stand right now. So fear is picking back up in the market, absolutely, and that will trickle down into the MJ sector, in my opinion, especially if the S&P 500 breaks its recent low. So a lot to be watching, a lot going on, bigger picture. Again, I used to talk about how when talking about the marijuana sector and Canadians, how they now have to be aware of what Trump is tweeting because it's affecting the overall market, and the overall market is affecting the MJ sector, and it's all interconnected, and it's always entertaining. So we'll see what next week brings, but most importantly, let's see how CGC does after hours.
All right, Dan, awesome input as per usual. Thanks for joining me again.
See you next time.